Hello friends, welcome to the new edition of Decluttering Markets with Santanu Chakraborty. Friends, today we are going to talk about a very exciting topic, and this topic is for first-time traders. We are going to talk about means and ways to limit losses and to make you a better disciplined trader so that you can grow your income from markets. So there are three golden rules to success in trading. The first golden rule is that you should only bet on high probable trading opportunities. You should identify the high probability through technical or fundamental research. The second golden rule is that you have to set your own targets and stop losses even before you contemplating taking your trade. And the third golden rule is that do not trade every idea, every news flow, every stock, every single day. If you do that, you will only end up losing your capital. And also, never trade on other people's convictions. You need to develop your own convictions. Let me give you an example why these golden rules are important. We'll talk more in detail about these rules. So, what we mean by high probability opportunities, like when you spend a lot of time, you need to ideally spend a lot of time on the company, on the market, on the index, on the sector, on the charts. Both long-term and short-term charts are these stock or asset class that you are looking at, and learn the characteristics of that company, that stock. For example, Indian Hotels is a favorite with old-timers of Dalal Street. Indian Hotels sleeps most of the time, but it wakes up 3 to 4 times in a year. And whatever movement it has to do, it will do within this short span of time. Similarly, ITC has a time as a band, it always moves within the band. It goes down, it changes the band to a new band. It goes up, it changes to band to a new band. And within that band, there is this 30 DMA and the 50 DMA that dictates most of its movement. The stop loss, the support and the resistance are very critical in ITC. Like for example, recently ITC is finding it challenging to move beyond 206, which is a kind of its DMS resistance. Similarly, ICICI Bank, for example, moves in tandem with Bank Nifty. It has more prone to movement with Bank Nifty than any other bank stocks. So, for example, the Calcutta Electric Supply Corporation is another old-time Calcutta's old-timer favorite stock. It is, over the last 2 to 3 years, it has been moving as per the corporate restructuring or the corporate actions that are happening in the stock. Whether this is a stock split or a dividends or whatever X they are. So you need to be, as a trader, you need to be mindful about these changes, these corporate actions that are taking place. To talk to you about another example, the Vedanta is a high beta counter. The stock can move very violently from this way to that way. It can move up from 100 to 400 in like 4 to 5 months. And it can similarly drop from 400 rupees to 100 rupees within a short span of time. So, friends, the takeaway from all this is that you need to have a sacrosanct stop loss, and the stop loss should ideally be 50% of your target. If you buy the stock at 100, 102 is your target and 99 is your stop loss. And for small time traders, it is always advisable to keep booking profits. Do not wait for the system to generate an alert. be mindful, be prepared. And a very important rule is that do not expose more than 5 to 10% of your capital in a single trade. Do not take more than 25% of your capital in a single stock. And do not risk a maximum loss of more than 4 to 5% of your capital. And be aware of the risks out there in the market, either through stock correction or volatility. So and depending upon your risk appetite, you can have an absolute number for a maximum stop loss. It could be like 5,000 or 10,000, whatever is your appetite. And when you are starting out, please always take all your trading calls with equal funds, and always be prepared and take the calls. When you take the calls before 9:30, these calls are very risky. So those calls ideally should be taken by high risk traders. Safe traders, on the other hand, should keep a target of 3 to 5%, and for generating the consistent profits, they can move up on that band. So this is what the gist of what we have got for today, and this is a good poser for young traders who are coming, the Robin Hooders who are coming to the market. And that's all for today. Keep watching Decluttering Markets with Santanu. We will be back with another edition soon. Happy trading. Bye.